Good afternoon, ladies and gentlemen. This is Chris Fahrenbrook again with AgWest Commodities out of Holdridge, Nebraska. Doing a quick introduction here again to kind of walk you through what some of the apps and some of the stuff that you guys are going to have access to if you choose to use this through the TAPS program. So first of all, I hope everyone's well. I hope you're doing the self-quarantining, staying the 6 feet away and social distancing. I know I'm coming from you live from my basement, my house here. Been here for the last couple of weeks and plan to be here for the future anyway until things change. But wanted just to show you a couple quick things. We'll get into it here, and if you've got any questions, my contact info will be presented at the end. Feel free to reach out. We can sure visit in more detail if we need to. So looking at this chart, one of the big things that we do with all our producers is we build a plan based on a lot of different things. Cash flow is obviously the big one. We've got to know what our cost of production is to grow these crops. But from there, then we look at fundamentals. We look at some technicals. We try to get a big picture idea on where has the market been, where could the market go, and how do we base our targets accordingly. So in front of you here is a DEES 2020 corn chart. It's a daily chart. Goes back at least through basically August of last year. And you can see I've got some lines drawn on there. Okay. What I've done is I went back to the high we had last summer, which was 423 3/4, and I drew a retracement in from that high down to the low of 355 1/4. And basically what I'm doing here is I'm saying that if that was the low, if 355 1/4 was the low, I've drawn in retracements to give me an idea where the market could retrace to if it does find a rally. So if you look down through here, markets will tend to retrace 38%, 50%, and 62% of the move. Okay, that's the whole move from the high to the low or the low to the high. So if you look here, the first area of resistance on a rally back would be in this 380, this 38% range, which would be 381. The 50% retracement falls at 389.5. The 62% at 397.5. So what I'm saying is a market, if it retraces, it can go to 62%. It can go to 100%, but markets will tend to go to 38, 50, or 62%. So when I look at this chart, that tells me that I'm going to be basing my targets in between that 38% retracement and up to the 62% retracement to have some fairly aggressive sales triggers based in that range. I will have a couple above those levels because we all know anything's possible in these markets. But I want to make sure the focus for our customers is with this pullback. We have to be more aggressive sellers and willing to sell at lower prices than we were 3 weeks ago. Okay, so that kind of gives you a little bit of an idea of kind of how we look at some charts, kind of how we use some of that stuff to help put a plan together. Now I'll take you over and actually show you some of the meat and potatoes here. This is our internal database. This is what every one of our RPM customers utilizes. This is where we track everything from start to finish. Okay, you'll notice up here right in the middle, this is a 100,000 bushel producer. Our insurance guarantee, which would be based off an 80% policy in this example. Okay, you'll notice percent sold, all those numbers. We can go in here and we can put acres, yield, all that stuff. We can get as detailed as we want in here, but for what we're going to be doing with you folks, this is going to be the key to what you're going to see. If you go down on here, down to the bottom, you'll notice there's two different lines. There's a target line, which is this top box, and there's an actual sales line at the bottom. Okay, this top box is where we will place orders relative to production targets, what have you, percentages. If that green arrow is checked, those are orders that are placed, that are ready to be sold, ready to be executed if the market gives us that opportunity. Okay, and as I showed you in the previous video, we did make some sales last summer around that 420 range. So in this particular example, there is some corn sold already. Okay, you'll notice over here under sale type, we can either use CBOT, which is Chicago futures. We can use HTAs, which I've got line 2 as an HTA. We can also do flat price or basis contracts. Okay, so going forward, if your team decides to use this program, it's your job to lay out to us, are you selling flat? Are you selling HTA? Are you selling basis? What is your plan going to look like? We can put it in here and we'll track it for you from start to finish. Couple things I want you to notice. Okay, this basis contract that I've got marked in here on line 6 and 7, that is a sold basis contract at 25 under for harvest delivery, but you'll notice under the actual fill box, it shows 0. Okay, why is that? The reason is until those bushels actually get priced, and what I mean by priced is have the future set against that basis, I don't want those bushels shown as priced because I still have price risk against that basis contract until I physically set the futures against it. Okay, so there might be some things on there that you might question when you get a copy of this plan when a change or an update is made. But just feel free to ask us. There's probably a reason we're doing it that way. It's just more for some internal use. So if you look down to line 6, you'll notice that against this basis contract, I have an order entered to price that at 407 futures, which if that fills, that would become net 382 cash relative to that 10,000 bushels. Okay, so this will track everything that you guys are going to need from start to finish. We can make this as many lines as we need. We can do as few lines as we need. It's going to be based on kind of what your group is looking for and kind of what your target structure is going to look like. So what are we running for targets? You can see in here, we've got a lot of different areas. I just showed you the chart on kind of some areas we would be looking at. For this example, and for most of the producers I'm working with right now, I am running a 393 futures target, a 401, a 407, a 417, and a 423. Keep in mind we've got a 420 sold from last summer, but by 423 futures, 90% of my customers are going to be 50 to 60% sold. Some of them probably at this point, as far back if we pulled this market lower, are probably going to be pushing insurance numbers by 423 if we're lucky enough to see that rally back. We've got some calls on the back end that allow us to do that. You don't have that option for what you guys are doing, but that's kind of how we're structuring targets right now. That's kind of the range that this market has been in the last 5 to 6 years. Really between 4 and 4.25 has been your opportunity. So not saying we get to 423, we may not, but I think you have to look at those resistance levels and put a plan together based off of what you need to accomplish relative to your cost of production and what you're looking to do. Okay. So with that, I'll flip over here real quick, show you the live app version. This is what I showed you in the original video that we sent out. How does this work? How do these targets, how does that change my bottom line? What does that do to our group, to our team? Well, right now you can see, obviously we have a lot of risk. Okay, with what's going on with this COVID deal, it's real. We don't know what the damage is going to be yet, but it is a curveball from left field that have really kind of taken a stronghold in these markets and really probably pushed us lower than maybe we should be at this point in time. Big report coming out tomorrow, so anything can change, obviously. But right now, here's where we're at. If we scroll down, obviously, you can see where those targets are placed. The red bullseye over here, those are the targets I just talked to you about that I showed you we would be sellers of grain at. You can see where we sold at 420. So if we come up here and just stress test this thing and drag this market higher, let's say this market decides it wants to rally and we get up to that 425 area. Okay, there's 428 futures. There you go. We're 50% sold. Okay, probably should be more aggressive than that, and I told you we probably would be, but right now that's where these numbers would take you. Okay, so when you get your plan built, when your advisor sits down with you, puts this together for you, you will have access to test this thing to really stress test and say, what does our plan look like if we go to 428? What if it goes to 450? And you'll notice over here on the left, your current profit potential in a 428 market is almost $55,000. That's pretty good considering the opportunities we have today, which is not very much. Okay, so the thing about marketing is not worried about hitting the home run. The thing in marketing is hitting singles and doubles and putting yourself in a position to succeed if you get the opportunity. Okay, the biggest issue we see with producers is they struggle to pull the trigger, because if I sell corn at 395 and the market goes to 410, I missed opportunity. I sold too soon. Okay, we understand that, but we also don't know we're going to get an opportunity to sell 410. Okay, so you have to look at what you know today, look at what the opportunity the market's given you, and make a decision based on that information. If you make that decision to sell grain, it's going to be a good decision 6 months from now. Yes, you might have left some money on the table, but if you were comfortable selling grain on that day, it's still a good decision. You can't second guess what you did, because if we do that, we'll never get anything done. And that's really what a marketing plan is trying to make the best decision you can at any given point in time. Okay. The other thing with this is it also, if you drag it down, take it down to 320, it's going to show you why being an aggressive seller of grain when you get an opportunity that makes sense is so important. Because if this market kept going higher, you're making more money. Okay, you're adding more value to your bottom line. If you only get 50% sold and this market drops, now you can see what your potential is just because we didn't get aggressive enough. So sometimes you can get overly aggressive and get too much sold. But in this environment we're in, you really have to look at the risk reward and decide, is enough and take some. One of the guys always says, if a plate of cookies comes around, you take a cookie. Okay, that's what making a grain sale is you take a cookie, and if it comes around again, if the market gives you another opportunity, take another one. If you do have questions, please reach out. I know it was a kind of a short and sweet example here, but we're here to help any way we can. Ask questions, answer questions, explain things. If there's something you don't understand, reach out and ask us the question. You'll all have an individual AgWest representative that you'll be in contact with that will be your main contact point. So anything we can do to help to be of assistance, please let us know. We're thankful for this opportunity, and we do look forward to working with you folks going forward.